Whether it is fate or destiny or just plain luck, we all search for that soulmate that will help us grow, make us better, and help us through the tough times. Yep, I'm talking about worry-free investing. And the soulmate I speak of course, are high relative safety stocks. They help us grow through their steady capital appreciation. They make us better by paying us a safe and steadily rising dividend. And they help us through the tough times by allowing us to buy puts and sell covered calls against them. And that's how I fell in love with high relative safety stocks. Hello, my name's Jim Penna. I'm the manager of retirement services here at VectorVest, and I'm very happy to be hosting this special presentation called How I Fell in Love with High Relative Safety Stocks. Relative safety in the VectorVest program is defined as the consistency and predictability of a company's financial performance. What two better adjectives can you think of to describe the stocks that fill your retirement portfolio? In this presentation, I want to walk you through the 3 steps to retire with peace of mind. They are the key pieces that every retiree should implement, and they make up what we call worry-free investing. Mark Twain once said, "Don't just sit there and worry, be proactive, do something, anything about what's worrying you so you can gain information, focus, and control over the situation." I've suffered a great many catastrophes in my life. Most of them never happened. And so in that vein, if we follow these 3 steps, you can retire with peace of mind knowing that you can grow your portfolio, generate income, and most importantly, protect your capital so you don't have to live through those catastrophes. When we asked our clients how they wanted their life to be different 3 to 5 years from now, one of the most common things we heard was, "I just want to relax. I don't want anything too special. I just want to live a comfortable life." What could be holding you back from doing that right now? In other words, what could be the problem? Well, first off, your portfolio is going nowhere. You're doing a lot of work, but you're just spinning your wheels, and it seems like every time you make some gains, shortly after, your portfolio rolls right back, sometimes in a deeper hole than where you started. Second, you don't know what to do when things go wrong. You get lost, confused, or unsure. And you find you're spending way too much time trying to figure it all out. You feel if you can't get things fixed, you're not going to have enough money to retire, and that the income stream has rusted shut, and you fear you won't be able to turn it back on. But it doesn't have to be that way. Instead of that happening, you want to grow your portfolio safely and steadily. You want to know exactly what to do when the market turns south, and you want something that's just simply not going to take up all of your time, so that when you retire, you can relax and live that comfortable life we talked about. Okay, let's go ahead and dive into the 3 key principles that you need. First of all, you want to play it safe. You need to focus on buying safe stocks of companies with consistent, predictable financial performance. Now, we did some research, and we found that the stocks with the highest relative safety rating in our database had a 98% success rate of going up over time. Now, every day, starting back in May of 1996, we took the top 20 relative safety stocks and we tested their performance each trading day up through the end of 2015. And here's what we found. There were 4,697 trading days since that start in 1996. The top relative safety stocks went up in price 4,621 of those days. That is over 98% of the trading days. Our founder, Dr. DeLito, has always taught us that good portfolio management starts with buying the right stocks. It's like filling your portfolio with all-stars, much like the 27 Yankees. Just having those great stocks in your portfolio will help your portfolio do well over time. And here's how it works. When we signal a confirmed uptrend on the market, that lets you know it's okay to go buy high relative safety stocks. When the market signals a confirmed downtrend, that lets you know you should stop buying. And at all times, we'll sell the stocks once our system gives them a sell rating. And here's a picture of why I fell in love with high RS stocks. You just can't escape the qualities that high RS stocks possess. The beautiful patterns of both price and earnings per share are very hard to resist. And so we see here this lower left to upper right pattern on both the price of TTC here, Toro Corp, historically high rated RS stock in our program, and the earnings per share. This is the forecasted and historical earnings per share calculation that shows again that lower left to upper right pattern. UNH, United Health Group, another historically high rated relative safety stock. the same pattern of earnings per share and price pattern. And that's not a coincidence that earnings per share and price rise in tandem. And when you continuously fill your portfolio with these things of beauty, these are the results. By following this plan, again, since 1996, our tests showed us an annualized rate of return of over 34%. So just by following key principle number 1 of playing it safe with high relative safety stocks, your portfolio can see a steady appreciation over time. Now, in addition to appreciation, you also need to generate some income, which brings us to key principle number 2, which is getting paid. You need to have a way to generate consistent, safe income. Think of it this way. A lot of investors focus solely on capital appreciation, which of course should definitely be part of growing your portfolio. But if you also start to collect some nice safe dividends, you're now starting to generate that additional income. So again, we'll look at Toro Corp. The same 5-year graph shows down on the subgraph, instead of earnings, we've put the dividend payout. And you can see this nice, steady, rising staircase of dividend payouts each and every year, a safe, steadily rising dividend. These yellow flags, each pair represents one dividend payout. The X is the ex-dividend date. The P is for the actual payout date. So over the 5 years, we've had a nice, steady dividend payout over 20 times over that lifespan. Same thing for UNH. The dividend staircase growing nice and steadily, and the same for AOS as well. So again, when we fill our portfolio with these type of companies, we can realize the potential of combining capital appreciation with high RS stocks with the power of the dividend payouts they provide. Now, this particular portfolio uses a search that focuses on high RS stocks. This is just a 5-year test period where combining capital appreciation and the dividend payouts, we're up over 86%, and in a very prudent / conservative portfolio with very little management that averages out to over 16% per year. Now, when you add selling options to the mix, you really begin to compound the effect of the income can have on your portfolio. Here's an example. DHR was the second highest relative safety stock in the S&P 500 at the beginning of 2015. Let's say you went out and bought 100 shares. Now, even though 2015 was a rough year, in fact, the S&P was actually down in 2015, DHR ended the year with about a 6% gain overall. Now, DHR also paid a dividend, and it had the highest dividend safety rating a stock can get in our database. So you would have been eligible for 4 dividend payouts through 2015, which would have added up to $54 income. In addition, because you own 100 shares, you could have gone out and sold covered calls against the position. And so let's just say on January 13th, you would have gone out and sold a covered call with a $90 strike price, and you could have received $70. Now, since DHR did not exceed that $90 strike by expiration, you could have gone out back again a couple of months later and sold another call against it. This time, you could have received $143. Again, the stock did not break through that $90 strike, and so you could have done it once again, say in June, for another $123. And then again in August or September. Had you done it in September, you would have received another $210. Now, by that point, your 100 shares of DHR would have been called away because that $90 strike had been broken. And so that's okay, because you still get to keep the $210 plus all the premium from the prior sales. And if we look at it this way, we see that had we done nothing and just had the capital appreciation without selling covered calls or dividend, we would have had a $551 return. However, when we add the dividends of an extra $40.50 because we would have missed out on that 4th dividend payout, we add $551 and we're up to $591.50. And finally, by adding selling covered calls, you've now bumped your total income for the year on this one position to over $1,000. So focusing on all 3 can really ramp up that income. And here are the results of another portfolio using the rules of worry-free investing that began back on November 15th of 2016. That was a confirmed up call. And so this portfolio includes returns from both covered calls and dividends. So it's up over 29% in just about 7 months. That's on pace for an annualized rate of return of 50%. Now, over that 7 months, the S&P 500 is up roughly 11.5% over that same time frame. And finally, the third key principle is to protect your assets. You want a way to protect your portfolio at times when the market shows signs of trouble. Now, we'll show you how to insure your portfolio, but first, a quick history lesson. Back in 2008, many retirees saw their retirement account drop over 40%. The average mutual fund was down 40%. The S&P was down just about 40% as well. At the beginning of 2016, the S&P dropped over 12%, again leaving many retirees scrambling, and it got hit in October of that year as well. A typical $100,000 portfolio would have dropped almost $7,000 in the first month of 2016 alone. So you need to have insurance for your stocks and your portfolio so that you can mitigate those drawdowns and ensure your protection so that you don't have to live through those catastrophes. And here's how it works. When the market shows signs of trouble, such as a confirmed downtrend, you'll probably have stocks in your portfolio. So you can go out and you can buy puts on each of those stocks for insurance. As we talked about, many times you could be out there also selling covered calls against those stocks to generate an added income. Well, you could use that income to help fund the purchase or the insurance for your stocks by buying the puts, and when you combine them, it's a trade called the collar trade. So if your stocks drop, the puts gain in value, offsetting some or sometimes all of the losses from your stocks. All right, here at VectorVest, our retirement services division has been working with retirees, and our mission is to help retirees move up a ladder. And I'd like to draw it out here for you because it's very important to see the game plan here. Now, this is the growth path of a typical retiree. As we go through it, I'd like you to figure out where you are on it and what the next level might look like. A lot of retirees, unfortunately, are down here on the life support level. It's not a great place to be because you're always scrambling to figure out how you're going to pay for things. The next step up is a little better, but nowhere near ideal. You're in now what we call dependence. You're not rubbing your last two pennies together, but you're relying on things like Social Security and maybe some other outside help. Next up comes independence. Your portfolio is growing a little bit each year, but maybe just beating out inflation, and you're not relying on others anymore. You're doing okay, but you can't quite do all the things you want to do. The next level up is called confidence. And here, something special happens. You look at yourself a little differently. You carry yourself a little differently too. You have a pretty good handle on growing your portfolio and generating that extra income. And then finally, the next step is where you have complete peace of mind. And this is where you've got everything working for you. You're growing your portfolio steadily, you're generating some nice extra income, and you have enough free time and money to live comfortable. All right, now let's talk about how to move you up from where you are now. Now, the keys to moving up this ladder are straightforward. We need to have a plan to get capital appreciation. We need to have a system to generate income safely and consistently. And we need to have a protection plan. Now, there's a traditional way to appreciate capital, generate income, and protect your portfolio. And then there's the better way. So if you're at the bottom of the ladder, the traditional way of appreciation is to either buy and hold stocks or go out and pay a financial advisor and hope that he can do it for you. The traditional way of generating income is to go put your money in bonds or leaving your money in the bank or counting on Social Security. And then finally, the traditional way of protection is selling everything and moving everything into cash, putting your money under the mattress, so to speak. To move up the ladder the better way, this is what we need to do. If we focus on appreciation, we need to shift to where we're buying safe stocks at the right time. The better income model is focusing on options and dividends, and the better way to protect is to focus on portfolio insurance using puts and collars. So wherever you are, in order to move up this ladder, you need to focus on those things. So let's talk about this. Do you see how powerful worry-free investing can be for you when done right? If so, it begs the question, how do I start building my worry-free retirement portfolio? Well, it's time to make a choice. You have two options. You can keep doing what you're already doing and continue to see the same results, or you can learn how to build and manage your portfolio to achieve greater growth, income, and protection in your retirement years. Let us guide you. On June 23rd and 24th, we'll be live streaming our Worry-Free Investing Seminar from our headquarters here in Cornelius, North Carolina. You'll be able to enjoy the Worry-Free Investing Seminar live from the comfort of your own home or office. Go to www.vectorvest.com/RS for more information and to register. Let's take a quick look at the agenda and see why it's so important for you to attend. We'll start with appreciation. On day one, we spend most of the morning understanding the VectorVest system, how to find and analyze the stocks with the characteristics we talked about, and then knowing exactly the safest time to go out and buy those stocks. We'll show you how to use the program to find only the safest and highest quality stocks for your retirement portfolio. We'll then shift to income in the afternoon. We'll find the right stocks that have the best combination of dividend yield, safety, and growth. We'll have some fun with the birthday game, showing you that had you given yourself a birthday present on any day from 1996 through the end of 2015, you would have been pretty happy with that gift. Finally, testing the worry-free system, because confidence really is the key. Before you put your hard-earned money into any trading system, you have to have the confidence, and we'll give that to you at the end of day one. On day two, we'll continue with the concept of generating income when we talk about covered calls. We're going to focus on day two on just two very basic option trades that are very specific to the income generation and protection of your retirement portfolio. We're not out to turn you into option traders here on day two, but we believe there are two trades that are no longer a luxury for you to know, but rather a necessity if you're going to generate income and protect your portfolio. So we'll talk about covered calls. To do that, it's very important, as we showed in some of the results, to continue to generate and compound the returns in your portfolio. And then finally, we'll get into the protection side. We'll eliminate risk and worry with just one trade. That's going to be the put option. We'll show you specific examples of exactly when and how to place that put option for your protection and insurance. And finally, we'll combine the two trades, the covered call and the protective put, in what's known as the collar trade. And we'll show you worry-free investing in action. And then finally, to end day two, we've got a special session on the worry-free income portfolio. I'll show you how you can sell your way to the ideal retirement with just one trade a week. So if you act now and go to that vectorvest.com/RS, you're going to get to save $100 from our special early bird pricing. So the two-day live seminar on January 23rd and 24th will be only $295. That offer expires on June the 12th at midnight. Our regular price for the event is $395, so take advantage of that early bird special pricing. Another bonus you'll receive are 4 live group coaching sessions. I'm very happy to have the privilege of hosting these 4 live group coaching sessions, where we'll talk about targeted help and tips and techniques on how to manage your retirement portfolio. We'll have some live portfolios going, and we can actually manage them together, see when it's time to sell a covered call, buy that protective put, or even sell the stock if the time comes. All of these coaching sessions will be recorded, and once you register, we'll get the schedule out to you of when they're going to take place. We strongly believe that worry-free investing is the surest, safest, easiest way for you to build and manage your retirement portfolio, and so we'll give you a 30-day money-back guarantee when you go to vectorvest.com/RS to register for the event. And finally, on Monday, June the 12th at 2 p.m. Eastern Time, we will be holding a special presentation Q&A session. So if you have any questions on this presentation or the course that's coming up on June the 23rd and 24th, join us there and we'll be happy to answer any questions you might have. So again, let us guide you. Our worry-free investing seminar will be live streamed for you from our headquarters here in Cornelius, North Carolina. Go to that link below, register, and you too will fall in love with high relative safety stocks.